Hey guys, welcome back. So today we will be taking a look at Upstart stock and trying to answer the question of whether or not Upstart is a millionaire maker stock. But first, in case you didn't notice, I do have a new camera. Yes, I have upgraded from my 10-year-old Nikon DSLR to a brand new Sony 4K camera. So if you enjoyed the new viewing experience, you can show your appreciation by giving this video a big thumbs up. Okay, moving on to the video. Upstart stock has been on a roll lately and is up over 700% since it IPO'd in December of last year. So if you were lucky enough to invest back then, you should be sitting on some very impressive returns. However, for most of us that were not fortunate enough to invest in Upstart stock back in December, what can we expect moving forward? Is it best to wait for this high-flying growth stock to cool down, or should you just throw in the towel and buy today? Well, that's a question we will be trying to answer in this video. Now, Upstart stock is a very interesting stock because of the market it operates in. Upstart stock is trying to disrupt an industry that has been dominated by a very small handful of companies for the last 25 years. And there are tremendous growth opportunities in this industry for new and innovative companies such as Upstart. So, which industry am I talking about? Well, Upstart stock is trying to break into the consumer credit industry and is aiming to improve the lending processes for both banks and borrowers. Now, up to this point, the industry standard in the consumer credit market was the FICO score. The FICO score uses a number of information sources to determine a borrower's credit worthiness, including the amount of debt a borrower has, the length of their credit history, their payment history, their mix of credit, and the frequency of new credit requests. And while these 5 pillars of the FICO score have done a good job at helping banks determine a borrower's creditworthiness in the past, the reality is that the FICO score does not always do a very good job. For one, if you are someone who doesn't have a credit card, the FICO score doesn't do you much good. Also, if you are younger and don't have a long history of credit usage, then your FICO score is likely to be lower. And these scenarios highlight a big problem with the FICO score. You see, the FICO score is inherently biased towards older borrowers who actually have a long history of credit usage. And this limitation has not been a problem for banks since baby boomers tend to be older and have much more financial resources. However, as the baby boomers get older and stop taking out as many loans, banks will need to start relying more heavily on younger borrowers to do the heavy lifting. And this shift towards younger borrowers who don't have a long history of credit usage makes a FICO score not as useful as it once was. On top of that, most millennials still live with their parents, so it's hard for banks to determine what exactly their expenses are, if any. Now, obviously I'm kidding. It's probably closer to 50-50. Okay, all jokes aside, this shift towards younger, maybe less qualified borrowers is where Upstart stock comes in. Upstart uses artificial intelligence, or AI, to provide a more comprehensive overview of these newer and younger borrowers. Upstart collects up to 16,000 different sources of data to help banks determine a borrower's credit worthiness, which is far more than the 12 to 20 variables collected by FICO. But even though this is really impressive, Upstart doesn't stop there. Upstart then uses that data and compares it against the 10.5 million repayment events currently in its system, creating AI models that use those previous events to more precisely predict the future events. And as Upstart's AI models gain more data points, the ability of Upstart to predict a borrower's creditworthiness will continue to improve. So instead of a one-dimensional static credit score, banks can now gain access to a system that is dynamic. And the cool part is that even with a relatively small number of data points, Upstart's AI models are producing some pretty impressive results. In fact, a recent study from last year found that Upstart's AI models are 5 times more predictive of credit risk than traditional lending models. Furthermore, a report from the Consumer Financial Protection Bureau shows that Upstart's technology boosted approval rates by 27%, while also lowering the average interest rate by 16%, which is a pretty big deal. And this win-win scenario for banks and borrowers creates a self-reinforcing network effect. So to sum it all up, banks benefit from using Upstart by gaining higher approval rates, lower fraud and loss rates, and a highly automated lending process, which means that they can approve loans at the same rate as banks that use the FICO score. And for the consumers, using Upstart allows them to benefit from greater access to credit and lower interest rates, because they aren't paying for the borrowers who default. Now, one of the most important things I look at when considering whether or not a stock is a millionaire maker stock is the TAM. TAM stands for total addressable market, and it is really important to understand the TAM for a stock because it determines the growth potential. If a stock with a $10 billion market cap operates in a market segment with an estimated TAM of $10 billion, then there would technically be zero growth potential for that company. So with that being said, let's look at the TAM for Upstart stock. Upstart is focused primarily on the personal loan segment of the lending industry, which is estimated to be worth roughly $118 billion a year. Now, comparing that to Upstart's current market cap of only $17 billion means that there is potentially a lot of growth left for Upstart. Also, Upstart is starting to expand outside of the personal loan category and is looking to offer loans in parts of the lending industry with even larger addressable markets. These include auto loans, credit card loans, and even home loans. And the exciting part about this is that Upstart has already broken into the auto loan industry, issuing their first auto loan in September of last year, which is pretty exciting news, especially considering that the auto loan market is estimated to be worth roughly $625 billion a year. Or in other words, the auto loan market is roughly 5 times bigger than the market Upstart currently focuses on. So this obviously represents a significant growth opportunity for Upstart moving forward. And in fact, we are already seeing the positive growth trends in Upstart's quarterly financial updates because of their expansion into the auto loan market. Upstart has been able to grow quarterly revenue from a measly $65 million in September of 2020 to a whopping $195 million in June of this year, which is a tripling of revenue in less than a year. Also, Upstart has been able to grow their number of banking partners from only 10 last year to 25 over the same time period, which is a great sign for investors. And because of this strong revenue growth and expansion among banks, it is a safe bet that Upstart will continue to expand in the coming years. Now, one of the biggest reasons I like Upstart stock over some of the other AI lending stocks out there right now is because of Upstart's strong profitability. Upstart has been consistently profitable and posted net profit margins of 19% for the most recent quarter, which is something that I really like to see in such a small company. Also, Upstart recently raised $575 million worth of capital that they can use to continue growing at a very fast pace. And that $575 million in debt will only cost them a mere 0.25% in annual interest rates, which means that they have a very good chance of using that money to generate a generous return for their investors. Now, what's really cool about Upstart stock is that they have been able to produce very impressive financial results by only partnering with a very small number of U.S. banks. Like we said earlier, Upstart is partnered with only 25 banks at the moment, which might not sound that impressive. However, with this limited number of banking partners, they have been able to generate roughly $6.6 billion worth of loans over the past year. Now, if we use this $6.6 billion number and divide it by the current total addressable market for Upstart, that is their personal loans and the auto loan segment, we can see that Upstart is capturing less than 1% of the market, which signals that there is plenty of room for growth left. Now, even though I have painted a very favorable picture of Upstart stock, there are still some downsides that we need to talk about. The first and most obvious is definitely the valuation. Upstart stock currently has a market cap of around $17 billion, which puts it safely in the large cap stock category. However, even though Upstart is only capturing 1% of its current market, it's unlikely that Upstart stock will 100x from here. A 100x return for Upstart stock would give Upstart a $1.7 trillion market cap, making it one of the most valuable companies in the world. And this is very unlikely to happen. What this tells us is that Upstart stock is definitely overvalued at the moment. And to confirm this, all we have to do is look at the price to earning ratio for Upstart stock. While the S&P 500 normally sports a P/E ratio of around 25, Upstart stock's P/E ratio is currently 367. So make no mistake, Upstart stock is not a value stock, and it is significantly overvalued. However, I want to make it clear to newer investors that just because a stock is overvalued by traditional metrics does not mean that the stock will not continue to rise. Many growth stocks trade at P/E ratios well above 100 for many years without crashing, and I do think Upstart stock is one of those stocks that could continue to rise for many years to come. Now, with that being said, if we look at the chart history for Upstart stock, we can definitely see a lot of volatility, which I would expect to continue to happen moving forward. So really what it comes down to, for those of you thinking about buying Upstart stock, is to know your own risk tolerance and know how much capital you plan to invest into Upstart stock to begin with. Now, obviously the riskiest option is obviously to go all in on Upstart stock today and hope that it will keep rising without any major pullbacks for the foreseeable future. And that could happen. However, a better approach, in my opinion, might be to go 50% in right now and wait for a 20 to 30% correction sometime in the near future before going all in. However, I want to stress here that there is no right or wrong answer. I cannot predict what the price of a stock will be in the future, and neither can you. So all we can do is properly manage our risk and try to pick stocks that have a long growth runway ahead of them, and also a solid track record of past performance. And I personally think that Upstart has shown that they have been able to do both of those things, and that is why I bought shares and why I will most likely continue to buy shares on any major pullbacks. But with that being said, let me know what you think of Upstart stock down in the comment section below. Are you buying or are you staying away? Let me know. Also, if you like this video, give it a big thumbs up and make sure to subscribe to my channel. And one more quick thing before I go, if you are interested in joining my Patreon, I will leave a link in the description below. There are a number of benefits, including a private Discord chat and notifications of every stock I buy and sell. So if that sounds interesting to you, head on over there and sign up. Also, I think there are still a few spots left in the $1 per month promotional tier, and those spots are running out fast. So like I said, go over there and sign up if that sounds interesting to you. And with that, thank you so much for watching, and I'll see you guys in the next one.